Okay, hi everybody. Claire Wasserman here. I am the founder and author of Ladies Get Paid. We are a platform, a global community, and a book. Obviously, trying to sell my book. And we are here to teach women how to level up professionally, financially, wealth, money, power, forward momentum, taking command of your career. I just don't want any of us to accept the circumstances that we have found ourselves in if we are not happy in them. I want us to feel like, yes, we can actually do something about it. And you all get it because you're here. Ladiesgetpaid.com. Join us. You can also follow me on Instagram at Claire Gets Paid. Also, Ladies Get Paid on Instagram. I'm going to go ahead and introduce our wonderful panelists today. I'm not going to read a long bio for each of them because you can go find them on LinkedIn. I'm also probably going to butcher some last names here. So let me just start with the hardest name. So Ariel, you know I'm beginning with you. Ariel Kimbarovsky.
Kimbarovsky, you got it.
Okay, she's the content strategy manager at M1, which we will tell you all about M1 in just a minute. She leads content and social media. Before M1, Ariel worked as a consultant for other fintech companies and personal finance educators. Welcome. Catalina. Catalina Costa is the creative lead at M1 Finance, where she leads copywriting, design, and brand strategy. Catalina uses her, oh, by the way, we're going to say Kat. We decided that. All right.
That works.
Yeah, Kat uses her background in journalism and advertising to make complex financial topics clearer and more creative at M1. Now you know why she's part of this panel. I heard complex and clear. Okay, this is welcome. Welcome, Kat. And then we've got Claire Hollis, whose name is my favorite. Sorry to everybody else. Claire Hollis is the director of communications at M1, where she leads internal, external, and executive communications and PR. So I know you're all here to learn about money, but if any of their roles sound interesting to you, if you are in those kinds of roles or want to get into those roles, we can absolutely talk about their careers too. Let me talk to you about M1, and then we're going to go right into the conversation because that's why you're here. M1 Finance is the finance super app. And yes, that is trademarked. There's a TM that helps people manage and grow their money with control and automation for free. We love that, for free. With over 4 billion in assets under management, M1 has empowered hundreds of thousands of investors to open accounts and improve their financial well-being through investing, digital checking, and lines of credit. M1 was named 2021 Best for Sophisticated Investors by Investopedia and 2021 Best Free Trading Platform by Smart Asset. You can learn more at m1finance.com. If you didn't catch all of that, totally fine, because we're going to send you a follow-up email. And if you're on YouTube watching this, we have information in the comments. By the way, today, yes, we're talking about money. No, we're not giving you financial advice because that would be bad for us. Okay. And maybe bad for you too. So we're not taking responsibility. Everything that we discuss is what we've learned, personal experiences. But I had to add that little disclaimer at the end. And the last thing before we move on is today's really kind of about big picture money stuff, right? Knowing that we've got milestones in our life coming up, right? We might have a really big vision of where we want to go. That's a little bit scary. It's a little bit overwhelming. So I want us to break down both the mindsets to get into to make it manageable, right? We don't want to feel overwhelmed. We also don't want to be nickel and diming, right? We want to feel like we have some runway, even if we're not working with much. And then going into investing, since that's really M1 Finance is the place to do that. I want to kick it off just quickly right now with Ariel, because we had a conversation before this. And you said, Ariel, let me know if I got your quote right. What you do are your habits, not your goals. Okay. Your goal is not going to get you there. What do you mean by that?
Yeah. So I think so many people are good at saying, okay, I want to be in this place in 10 years, 5 years, 1 year, 6 months, whatever that goal is. I want to start a business. I want to get a promotion. I want to save and build up my emergency fund. So I have 6 months. I want to save for this cool vacation. I want this much in retirement. That's really awesome. It's really good that you know where you want to be. But then what do you do about it every single day? Because a lot of times we just stop at saying that goal. Well, this is my goal. Well, I'm not quite sure how to do that. Or, oh my gosh, this is kind of intimidating. Or, whoa, big goal. how do I even get there? It's the stuff you do every single day. It's that habit that feels effortless, that breaks down all the steps that you need to do to get there, that pushes you towards that goal. But just having a goal doesn't mean that you're going to achieve it. And that's kind of the sucky reality that we don't talk about enough, is you have to do the thing every day to get there.
Yeah, I saw on your blog, which everybody check out the blog. It's awesome. There was a blog that said tiny habits, which I thought was really interesting. So
Yeah.
what exactly is tiny habits? And then how do you actually cultivate them?
Yeah, so Tiny Habits is based on the work by Dr. BJ Fogg, who is a psychologist. I believe he's at Stanford or worked at Stanford. But he wrote this book called Tiny Habits. And we read that book. We love that framework. And it essentially says this: you can do one of three things to change your outcomes, to get yourself to your goals. You can design your environment. You can redesign that. So change kind of the environment you're in, the platforms you're using, the space you're in. But that's kind of hard. That's a pretty big overhaul. And not everybody can change our environment just like that. You can change your intention or your goal. You can move the goalposts, but do you really want to do that? Or you can do small habits. And so Dr. Fogg's work is really based on the idea that you do this small thing and you make it a repeatable action and you give yourself a reward. So when this happens and that's your trigger, I do this, your action. And after you do your action, you get a small reward. And that might be something like, when I wake up, I'm going to do X, and then I'm going to get my fun coffee, right? When we think about finances and we translate that to our money, it might be every time I buy a coffee, I'm going to match that money and put it towards my retirement fund. And then I'm going to give myself a high five, because even though that seems small and silly, it's that positive reinforcement, that positive psychology that keeps us going, keeps us doing that thing. And it's small, it's easy. It's not, oh, I have to contribute $200 a week to my retirement fund. That's great. Not everybody has that mentality. So the way that you break it down is we follow this model of the Tiny Habits framework.
And I love, Kat, thank you for dropping in the link right there. Something else I just want to mention really quick: if everybody's trying to adopt kind of a new behavior, something that I have found personally helpful is if you associate it or attach it with a current behavior. So when I was trying to start meditating and it felt like, oh, I don't have time for this, even though it was just a 5-minute meditation, I started to do it after I drank espresso in the morning, or as I was making the espresso, I was focusing on the sound and the smell. I would take it, okay, the touch, right? And then it became a daily habit on its own. Didn't have to even be around the coffee anymore, but it was a way of getting started because I was doing that thing anyway. Curious for Claire and Kat, and by the way, I'm totally wearing the same outfit as Claire, so that wasn't planned. I don't know for either of you guys, if you want to jump in terms of thinking about your finances, maybe bad habits that you've had before, not to put judgment, or shifts of behavior that you were looking to have or implement in your life. Did any of what we just talked about resonate with you personally? And if you want to bring in M1 to how that's been helpful to you, that would be great too.
Yeah, absolutely. And I noticed that we were wearing the same outfit as well, Claire. So we must be connected on some name wavelength. Yeah. But thank you for having us. It's wonderful to be here and to speak with all of you today. I think, the bad habit that I used to have that I worked really hard to break was I had a mentality that letting money sit in cash or in my checking account was the right way to save, and that if I was just keeping it in checking, that meant I wasn't getting rid of it, and it's like money in the mattress kind of mentality. I grew up in a household where it was reinforced to me time and time again that debt is bad, particularly credit card debt is really bad, and I got into a habit of just religiously paying off my credit card bill, but not really doing anything else with cash. And in fact, it felt painful to transfer that cash out of the checking account into an investment account because I felt like I was not able to access it. It was this like weird mentality that if I took it out of my checking account and I didn't have it accessible, it wasn't there anymore. I don't know if anyone else struggled with that or struggles with that. But for me, it felt really hard to create that habit of moving it over. And so the thing that really worked for me, and I love the examples of tiny habits and having a positive reinforcement, but for me, I really just needed it to be done for me and not to think about it. So I had to set up something that was automatic, that would withdraw from my account. I do it now with to associate with a payday, but really any frequency or any cadence that works for you works. But I can't even think about it, because if I see it, or if it relies on me to do, I won't do it. So I almost have to just set up that rule and then not even think about the money going out of my checking account. I'm really, really bad about that. But again, now that we have mechanisms and tools to do that, like M1, it's a great way for me to not have to feel that pain point of like transferring money out of where I can see it.
I appreciate Tracy. This again, use the chat, guys. Tracy, solidarity. I know she's not the only one. I'm with you, and not just because we're the namesake. So I feel you. Yeah, just I don't want to see it, but I want to know that it's there. Kat, also, you look like you're about to jump in, but first, can you show us what your shirt says?
Oh yeah, this is some M1 swag that we have. It says M1 Invest and M1 Borrow and M1 Spend. These are the three main products that we have. So representing the product here today.
Very nice, very nice. So what were you going to say?
Yeah, I mean, similar to Claire, I've always kind of struggled with that mentality as well of, I know that having cash just sitting as cash isn't the best use for it, right? It depreciates every year. Inflation is what, like 2 or 3% every year. So if you're keeping your cash without having it work for you, it's like you're losing a little bit of money every year. And I still struggle with that too. I have a very low risk tolerance when it comes to investing. And so basically what I had to do in order to kind of trick myself into making my money work for me better is having different accounts that have different purposes. So I do have an investing account that has just very low risk profile ETFs. It doesn't make me that much money, but that's okay. It makes me more than inflation every year. It's growing, and I'm not trying to beat the market. And so that's kind of like my long-term growth pot. And then for most of the rest of the money that I have, in a checking account, instead of keeping it in a checking account where it's just going to sit and stay idle and not grow, I actually have a lot of it in my M1 Spend checking account. When you have the M1 Plus membership, it gives you 1% APY. And so I know that even though it's not growing that much, it's still growing a little bit for me every year. And so it gives me a little peace of mind that I'm not losing as much money as I would be. But yeah, I think that it's hard because as women, I know that we tend to have lower risk tolerances too. We tend to, grow up and be told like, money isn't, it's not your friend. You're not supposed to like be doing your finances. So it can be really hard to break out of that mentality. So I think it's just really important to figure out what your goals are and then figure out how to get there slowly, but surely. And what tricks you can use to put your mind in the right place so that you can have your money work for you.
Can you define what an ETF is for everybody?
Yeah, of course. So an ETF, that means exchange traded fund. And it's essentially like a security. It's kind of like a stock that you can buy on the exchanges, but instead of being just a stock, one company, they tend to be collections of several companies. So there's all kinds of ETFs out there that track different industries. Some of them track the market, like the full market. Some of them track companies that are, that have female CEOs. There's all kinds of ETFs out there. If you do some research, you'll find whatever you're looking for, honestly.
Something that both Claire and Kat, you made me think about this. Yes, of course, there's the mindset, like there's the, scarcity mindset. You feel like you don't have enough money to do this. Then there's the reality where you maybe don't have enough money to do this. So of course, that's a very personal decision, right? What is, quote, enough money? But that was a question that got submitted. It was how to start investing at a small level. How do I learn to make the most money with the little I have right now? So I don't know who wants to jump in first about that, but that's, that's been me for a long time. So curious what kind of advice you would have for me in terms of getting started with investing or even saving, to be honest.
I 100% feel that pain. And it was the reason why I wasn't even allocating money into a 401k for the early years of my career, because I was like, I'm making so little, I can't even afford to take more out of my paycheck. And again, it goes back to, it honestly, at the time, it was my boyfriend, who's now my husband, was like, Claire, you have to start saving for retirement because nobody else is going to do it for you. And my mom, who worked in education, had, a pension account, and that was a totally different retirement mindset and track, but she reinforced the same comment. And so it was finally like forcing the hand of signing that paperwork and saying like, okay, just take out like a small percent, just start. And even if it is the smallest amount, just start, because then that habit does begin. And as you grow in your career, as you, hopefully start to make a little bit more money, that percentage grows and grows. And of course your investment account grows. And then you are rewarded by that feedback of seeing your account get larger over time. But again, I absolutely feel the pain. I understand how hard that is. And it took me a while to do it. I saw Kat and Ariel nodding, so I don't know if you guys were there too.
Ariel, do you want to jump in? I'm also curious, did you tell me before that your parents are immigrants, or just curious from, culturally, if that influenced the way that you looked at money? And then, if you want to talk about not having enough money, let alone like not feeling like you have enough money, and how do you decide what to allocate towards saving and investing and getting over that hump?
Yeah. So my dad and his parents and my uncle immigrated from the former Soviet Union. They were refugees, very dramatic immigration, whole 9 yards of rough first apartment, trying to build the American dream. And they did manage to do well and start a very awesome life, but there were still residual effects from that impacted me. And a lot of those were mindset, and some of those were financial impacts that were very real for my family. And it might have been different than people that were also living in my area. And a couple of them were quirks, like my grandparents were moving a few months ago, and my grandpa calls me, and it was the pandemic. They were in a different location, and he called and said, "Hey, can you check behind the TV? Because I think I left some money there."
Wow.
What, you left money there? And my grandma gets on the phone and goes, "There might be like our savings there." And all I could think was, but you've gotten to the place where you've gotten a house, we did the things, I thought we re-educated, and that mindset is still there. And that's why, Claire, I related so much to what Claire Holland was saying with that, like, save money under the mattress mentality. I mean, that literally, like, money under the mattress was a thing I did because of this fear of, putting it into a bank or a financial institution. And so there were a lot of quirks, like if you open a butter container in the refrigerator, it might not be butter, right? Like a lot of that stuff, or just some of the cultural conceptions that come with it. And my family coming out of a communist society, there's just so much there. And the way that we handle money is the way that we've been taught to handle money. But how have we been taught or not taught? It's from our families, and that stuff still sticks. Something that a mentor told me that was really powerful was 1% is still a percent. Mm-hmm. So when I was really scared to pull money out of my paycheck, when I was really scared, when I was freelancing, I was trying to build a business, and I went, holy heck, I have to pay attention to taxes. Holy heck, I have to pay for college tuition. I don't know how I can be financially responsible for anything. Also, my siblings are going to school, also parents' retirement, right? There's so many things that especially from the way that my family came to the US, there are so many responsibilities that I might have that peers may not. And 1% was still a percent. And I held on to that. And what that did was help me build the habits so that when I eventually built my way through, was able to earn more money, 1% could turn to 10% towards my IRA. But I was still contributing that 1%, and that still counted. And me in a couple decades is going to be so happy because it's better than zero. And that's what I've held on to. And I would high five myself for the 1%. I would high five myself for the $5 I put towards investments, because eventually I hit that first 100, and then I hit the first 200, and it kept going. And that's all that mattered. It's really hard because I would compare myself to people that had the trust fund or had whatever it was, but 1% was still a percent. And I put that on a sticky note that I still have today, and it just hangs out next to my desk.
I love that. And also we tend to think of like the 1%, right? The billionaires, but it's sort of like we get to be the 1% too, right? In a way. My mother does hair. I grew up finding money hidden in drawers. I now hide a cash stash. Why? No clue. Yes. And this is why we should also have no shame around this, because these are things that we were either taught explicitly, it was modeled, or we absorbed it. And so why have shame when this was just, it's sort of like it's been imprinted on our DNA, and now it's time to learn and to unlearn. When have there been time? So let's maybe talk first about getting started with investing. And then I'm curious, when you're ready to up your game, right? How do you know maybe you're making a little bit more money, right? Or you're ready, there's a big milestone that's coming up, like how to know when to change also, right? And what does leveling up look like financially? But let's just begin with at the beginning, starting. How do I start? Where do I start? And whoever wants to jump in, I welcome you.
Start here. I'm pointing.
Yes, there you go. You're great.
Start with M1 Invest. But completely joking aside, there are so many finance tools and platforms out there. Obviously, like we're going to talk about M1 because this is where we work. But you can always do research and find something that's truly right for you. With M1, it's really easy to get started. There is a $100 minimum first deposit. So if you're somebody that, is struggling to even get to that point, you can always start stashing money away in a savings account or in your checking account, making sure that you get to that $100 threshold, and then start an M1 account and start investing. If you have no idea how investing works, go to our blog. Ariel and her team put out a lot of really helpful content about how to determine what kind of stocks you should be looking at, what kind of portfolios, what's your risk tolerance, what goals should you really be looking for. So there's a ton of helpful stuff in there so that you can start learning. If you're short on time, you can't learn that quickly, you just are itching to get started, but you still don't know how to pick your stocks, that's okay. M1 has a lot of preset portfolios that you can use as kind of your guidepost to get started. We call them expert pies. So a pie in M1 is basically what we call your portfolio. So you can organize your pies. You can buy stocks or ETFs on M1. You can get started with these expert pies. You can put expert pies within other expert pies. You can customize, you can do whatever you want. So if you really don't know how to get started, check out the expert pie section of the M1 app. It can be really helpful. If you know a little bit of what you're doing, search through the stocks, search through the ETFs, pick whatever you want. And then you build your own portfolio. And again, the entry point at M1 is $100. So if you've got that lying around, great, you can put it to work today. And if you don't have that lying around, that's okay. You can start small. You can, put that 1% of your paycheck away for a couple weeks, a couple months, however long it takes to get to that threshold, and then start investing. The important part is to make your money work for you, and to do it at a level that you're comfortable with, and with, stocks, ETFs, all the things that you understand, so that kind of how it's working. So really try to educate yourself as much as you can about how investing works and how your money can grow.
But at the same time, you also don't need to know everything. It's interesting. It's this balance of like, you want to get out of your comfort zone, right? Because if we're stuck in the like cash under the mattress, then we're going to be losing money over time because of inflation. So you got to get out of your comfort zone, but also the fact that when you start investing, there's the risk tolerance profile that you need to understand about yourself, that this is personal to you. And same thing with self-educating. Obviously, we're an educational platform, learn as best as you can. But we know that you don't do this for a living, probably, right? Like you need to go live your life. And so it's also following guidance. So kind of both eyes wide open, but also, allowing people to guide you. Tell me about community pies also. I just dropped that link. And what's the difference between expert pies and community pies? And maybe we could break it down even more because I see that there's a women-led pie. So I'd love to just dig into that a bit too. So I don't know, Ariel or Claire, if you want to jump in and talk about the difference between community pies and expert pies. And now I'm hungry. Now I'm very hungry.
I can tell you a little bit about community pies. They are a selection of essentially curated pies that focus on groups of publicly traded companies led by different groups. So we have a Black-led pie, a women-led pie, LGBTQ plus led pie, many others that you can add to your portfolio. And really the idea is providing people the ability to invest with their values in mind. And we are adding to that collection of community-led pies over time, but it was a really exciting initiative to launch at M1. And again, give our clients the opportunity to incorporate companies into their portfolio that align with their values.
Curious, do you all have which pies do you have, and like how? Also, this kind of leads into another question I meant to ask: is how often should you be checking this? Obviously with automation, the point is that you don't have to go in and actually take an action, right? Set it and forget it. But I also don't want folks thinking that, let's just walk away and not be part of watching our money grow and understanding what's happening. So maybe let me just kind of walk it back with that first question of, for you all personally, like which pies did you choose? And then just kind of money in general, how closely you are looking at it, both your tracking of your spending, what you're saving and investing. Ariel, do you want to? Yes,
I
go
can
ahead.
kick it off.
Yeah.
So we're not going to say which ones we personally invest in because we have a fantastic compliance and legal team that would not love that because we're not investment advisors. And we highly, highly encourage that you do your research. And also when you're investing in a community pie, just speaking for myself, I'm doing it based on my values. And my values might be different than your values. We probably have some shared ones because we're here today, but they're going to be different. And so we don't want to skew your mindset in thinking, oh my gosh, I have to do the same thing. Whatever path you choose is the right path for you. And then to answer your second question of how often should you be checking, it kind of depends. I'm a long-term investor, so I'm not checking every day because that would be insane. And that might make me feel really nervous because on a daily basis, the stock market moves up and down. And oh my gosh, does that cause so much anxiety if you look at it every day? But I'm confident that the stuff that I picked, I believe that it's going to last the 5, 10, 20, however many years I'm thinking about. So I have some different goals in mind, and that's why I invest retirement. I'm looking decades ahead, right? And so I might check in on that once a month. I might check in on that once a quarter. It's not that often because I'm confident in what I invested in. I'm making regular contributions. What I will do is sometimes check every paycheck because I'm making that regular, it's pulling money out of my paycheck. I'll check my pay stub and then I will check the M1 app to make sure that that right amount that I set, that percentage is going in. Same thing, I have regular contributions set up to my general M1 portfolio, my taxable account, and that's where I'm saving for vacations and for long-term things like buying a house and all that fun stuff. I'm checking that. every few weeks, probably just to see what's going on. I do monitor the news about the companies I hold, and if I think something will impact it long term, I'll make adjustments. But I typically just set up a date for myself on the calendar. I call it my financial checkup date, and it's kind of like a physical, but happens a little more frequently. And I play my favorite playlist, and I usually treat myself to some chocolate, and I check in on all my finances. But I do the paycheck review usually too, or whenever it's pulling contributions, just to feel good.
I think it's important to also note that you should really check into your finances whenever you have like major life events. So when something happens in your life that changes your circumstances, it's definitely time to check into your finances and see, is your plan still working for you? Do you need to make adjustments? So for example, if you're moving in with a significant other, maybe you need to figure out like how to merge finances. Or, if your plan is still working for you, if you need to make any adjustments, or if you have a child, if you get married, if you move cross country, any big life event is probably a good time to check in and make sure that you're still doing okay, or that you make whatever changes you need to make to.
Question that got submitted was, how do I handle finances with a significant other? So partner, spouse, and I think, Claire, I'm going to throw that one to you.
Happy to take it. It's kind of funny. I feel like me telling people how to handle finances with a significant other would be like me telling you how many children you should have, or if you should have children at all, because it is such an individual, personal decision. But the advice I will give, I'm married and obviously do manage personal finance in our household with my husband. But really the important thing is have a plan and be open and honest about what your financial goals, short-term, long-term, risk tolerance, what you come into the relationship with or without. Be honest about, if you have debt or student loans. And again, what your psychology is around money, because I think people really underestimate how we talked a little bit about earlier, like how embedded that is in our DNA. You bring that into the relationship with you. And I think having those conversations early and having them often are really, really important. I'm sure everyone's like heard these statistics that one of the top contributing factors to divorce or the breakup of relationships is money. And so again, I don't claim to be an expert on this, but, and every couple and every household has something that works for them. But just have a plan, be open and honest about it, and check in on it frequently. And when I say frequently, I mean like, every year or with significant life events, having children, buying a house, moving, retiring, whatever. In my household, we find it really helpful to have one shared account and then our own separate accounts that we, kind of have our own thing on the side, because I don't like to ask my husband every time I want to do something or vice versa. So that's what works for us, and every household and couple is different.
Ariel, I think you had a root canal and you talked to me. Yeah. Cause now we're on like, we went from pies to root canals, but we're talking about money, big money milestones, right? Big money moments. And you had a root canal. I think you used M1 Borrow, and we haven't touched on what that is, but yeah, both of you, I think, Kat, someone who used M1 Borrow to pay for a wedding. I know there was somebody who did a down payment of a house, a root canal. So I don't know if we want to start with Kat or Ariel, but jump in and talk to me about borrowing, because that in a way sort of feels like me, it feels scary, maybe similar scary or not so much similar scary to like investing. But like, am I going to be able to pay this back? Am I going to be punished for this? So I don't know, Kat, if you want to jump in first.
Sure. Yeah. So I'm the one that had the unfortunate root canal last year, so I can get into that in a little bit. But first, borrowing, again, depending on your situation, borrowing using this specific M1 product may or may not be right for you. So definitely check into it, look into it and see if that's something that you want to take on. Basically what happened to me last year is I went to the dentist after a whole entire year of not going because pandemic, things happen. And when I sat in the dentist chair, they told me, "Oh, this tooth of yours, not looking good. We need to get into it. It's going to be about $3,000. I was like, oh, that's a lot of money. How much does my insurance cover? And my insurance didn't cover very much. So I was like, okay, what choices do I have here? I don't have all of this money in my checking account right now. I have this money in my investing account right now. So I had a couple choices. I could, delay the root canal and start saving money so that I didn't have to drain my investments. I could sell part of my portfolio to get those $3,000 to pay for this root canal. Or the other thing that I chose to use was M1 Borrow. It's this second product here on my shirt, which is essentially a margin loan that we offer at M1. Margin lending is a type of borrowing that can be risky depending on what you have in your portfolio and depending on what's going on in the world. But margin lending is basically a way that you can borrow against your investments. So you can tap into your portfolio and you can use that money without having to sell any part of your portfolio at all. It's a line of credit. At M1, we charge 2% to 3.5% interest, yearly interest for this loan. So basically what I was able to do is I took the $3,000 from M1 Borrow. I put it into my checking account. I swiped my card at the dentist's office, got my tooth fixed. And then throughout the next couple of paychecks, I started paying off that loan slowly. So instead of having to say goodbye to $3,000, which is sad, I was saying goodbye to like $300 at a time. So it took me a couple months to pay it off, but that's okay because that was what I was comfortable with. And eventually, I set up automatic payments. So that was, out of sight, out of mind. I didn't have to worry about it. I basically just paid off. I think it took like 3-ish months total to pay for it all. So it was a super easy way for me to get that done. And now my tooth doesn't hurt anymore.
I was gonna ask also, what was more painful, paying or the tooth?
Honestly, I do really well at the dentist. I have terrible genetics with my teeth, so I'm very used to being on the dentist chair.
Oh man, Sally's asking a question. And by the way, everybody pop your questions in. Let's, we want to make this helpful for you. So Sally's asking, what is the max amount on a loan?
So for M1 Borrow specifically, it's based on your portfolio. You can start using M1 Borrow once you have $5,000 in a taxable invest account. So once you cross that threshold, you can borrow up to 35% of your portfolio. So if anybody's quick with math, that would be great. Otherwise, let me see. So that means that if you have $5,000, around $5,000 in your M1 Invest portfolio, you could take $1,700 around at a time. More money, you can borrow more.
Kat, also you mentioned, I think I have a note that somebody who used M1 Borrow to pay for his wedding.
That was one of our clients. Yeah.
And is that a good idea also?
I think it depends on your circumstances. Okay. And it depends on, what kind of wedding you're planning. If you're planning a huge wedding that's going to cost you like $100,000, you probably need a lot of money in your investment account in order to borrow that $100,000. But yeah, so that was one of our clients. We actually put out a call one time for testimonials. We just wanted to hear from our clients to see how they were using. And this one man messaged us to say that he planned his wedding using M1 Borrow for it. He didn't go into specifics of like how much money he spent or anything, but he did say that he appreciated the low interest rates and then just being able to have that money be so flexible so that he didn't have to, again, sell a large portion of his portfolio in order to be able to have a nice party, host his family and his wife's family, and be able to celebrate that day.
Here's a question from the chat. It was asked a little bit earlier and there was an answer given, but I want to just call it out for everybody, especially those who are maybe watching this on YouTube. So Lauren asked, does M1 offer self-employed 401ks? My employer provides me with a 401k match. However, my spouse doesn't have a 401k. I think Ariel, maybe, I think you answered this in the chat, so I don't know if you want to jump in and answer it for everybody.
Sure. So we do not offer 401k, self-employed or businesses. They're not on M1, but we do have IRAs, which are another type of retirement account, and your spouse can open one up if you're eligible, meet all the criteria, right? You can apply to open one. And there are a few reasons why people choose to either open an IRA or roll an old 401k after they've switched jobs and it's sitting in that brokerage you never wanted to deal with in the first place. They tend to roll them over to IRAs. And one of those reasons is fees. Fees in 401ks can be really high, both from the account management side of things and even the trading. Sometimes you're also limited in what you can invest in a 401k. If you guys have those, you know that you have a specific set of options and you have to choose. I can speak to M1 IRAs, but you have way more options. You can control what you invest in. You can have a little bit more choice. You can build your plan. You can feel confident in it, or you can select one of our expert pies. If you're like, no, M1, tell me what your expert said. That's totally cool too. And we also don't charge, traditional management fees. And so those are some of the biggest reasons why people do that. And then the other reason is if you're using M1 for your investment account, we obviously hope that people are, it's kind of easier to just have your money in one place. Nobody likes logging into a million brokerages. It's really hard to understand. They don't really link together. It's harder to move money around and contribute. So it's a lot easier, and people choose to do rollovers or open up an IRA with us because they just want their money in one place and they can do fun automations that move their money without them having to think about it.
I think Ariel, I don't know if it was you, or maybe it was Claire, you mentioned something about having different accounts for different things, or, I mean, that's something I've read before. If you can be goal-based. So you maybe have a checking account that's specific to saving for a vacation. Maybe you have an account that, to your point earlier, Claire, of like one that you share with your husband. Is that something that any of you all do? Is that something you recommend? How would that work on M1? So again, balancing let's have it all in one place to make it easy, but also knowing sometimes having separate accounts can remind you of the goals that you're saving towards. So that was a very long-winded quasi question.
I can personally speak to, as Ariel was saying, having brought over my 401k to M1 into an IRA, and then also setting up multiple accounts with M1 so that they do all exist in one place, but I can see, different accounts for different purposes. That's like my brokerage account versus my IRA. That's been really helpful for me. And again, just the idea of simplifying as much as possible my financial life and seeing it all together is really, really helpful for me. Again, I think Kat was the one that was talking about having accounts for different purposes, so I'll let her speak to that. But I do feel like that's kind of if that works for you, absolutely do it. But yeah, I can personally speak to the IRA and brokerage in one place. It's really nice.
Yeah, so I do have a couple of different accounts that just have different purposes. So for example, I have a couple of invest accounts. I have my IRA, where I save money for, 65-year-old me. And I know that she's thanking me sometime in the future. Then I have a taxable regular investment account that is super low risk. And that's my very long-term, because that's what I'm comfortable with. And just when it comes to money, I want to make sure that my money is relatively safe. So that's what's right for me. And then I have another smaller investment account. That's my risky play money, that's where I make my bets. And I say, these are the companies that I think are going to be great. These are the up and coming companies. And, I set aside a portion of my savings that personally, I am okay with it going down if it needs to go down, but I'm hoping that it'll go up. That's why we invest, right? Because we're hoping for the upward swing. Then when it comes to actual spending money, I do have a couple checking accounts too. I use my M1 spend checking account mostly for like my really short term savings. So if I'm saving up for a trip or something like that, that's a good use for my checking account. And then I have another checking account that's it's the sole purpose of that one is just to pay off my credit card. I do most of my spending with my credit card. I use it like a debit card.
Me too.
So I have the automatic payments. So that's kind of like how I've structured my savings. It's more on the very short term to long term savings goals, and then retirement. And then always like a pocket of this is my what I hope makes me rich in the future. But we'll see.
I do the same thing, and our pies are really helpful for it. So if you look at this little thing, it's a visual representation of pies. So we visualize your investments in these pie charts. And if you think about like your desktop computer, you have your folder and you can have little subfolders in it. With our pies, you can do the same thing. And so your portfolio is this big pie, and then you can have others. So I do the same thing. I have my retirement account, like Kat has, and then in my investment account, I use the pies to organize based on, I have a trip coming up in a year or two, and I can invest that money and make it work a little bit harder. I have part of my emergency fund in there. I have part of it in a traditional savings account too, because investment comes with risk. But I have different goals. I have a rainy day one. And so some of those are shorter term and some of those are longer term, but we have some automations where that money can also move around. And so it's really helpful. And I also have other accounts in different places. Like Kat, I have different checking accounts, and I like to make my money move and disappear, so I don't have to make that choice. But that part's really nice. And I'll link to smart transfers too.
Socially responsible investing. I think I saw an article on your blog about that. Ariel, was that something, I don't know if you wrote that article, if you want to talk more about it. When I looked at it quickly, I saw that it mentioned gender lens investing, which clearly is something that at Ladies Get Paid, we need to be talking more about. But do you want to talk, is that something, I don't know which pies that you have and if that's something you can even disclose, but looking at socially responsible investing, SRI, anything to talk about there, and how we all can get involved?
Yeah, so I can't talk about my pies because again, my pies are going to look different than your pies. And I hope they do, because we're totally different people. And we have totally different goals and backgrounds and histories and cultural contexts, all that fun stuff. But socially responsible investing, you might have also heard of it as ESG investing. And it considers different values in a company's overall strategy, as well as its financial returns. So traditional investing, you're just looking at, is this thing going to make me money in the time frame that I want it to make me money in? And with socially responsible investing, you're thinking, is this thing going to make me money in the time that I want it to make me money, whether that's 1 year or 10 years? And are they making decisions that benefit the environment, that benefit social impact? How are they making those corporate government decisions? So it's through that lens. And when we think about gender lens investing specifically, in the case of this article that my team put together, it was to support women's rights. So if that's really important to you, maybe you're investing in publicly traded companies that are champions for women's rights. So maybe they practice corporate social responsibility and they give money to different organizations that you also believe in. And you believe that's going to make them successful. It aligns with your values. They're making decisions in the way that you might want a corporation to make decisions. For many people, this is an awesome option because sometimes, I don't know about you guys, but I look at the stock market and I go, what a game to make wealthy people wealthier. Yeah. And what about the love and the soul and the care? And what about the nonprofits of the world, right? And so this is how you can kind of meet in the middle and hit your financial goals and also feel like you're not sacrificing what your values might be. And if you're not interested, you don't have to do socially responsible investing. It's totally okay. It's just up to you and what makes you feel good and happy at the end of the day.
Claire Holland, you just actually direct messaged me when you meant to send it to Lauren.
Thank you.
But I'm glad that you did, because I'm going to have you just say it out loud. So let me just say what Lauren's question was, which was really good. She said, this is the third time this week I've heard to use your credit card as your primary spender versus a debit card. How have you seen the benefits? So yeah, Claire, do you want to talk about how you used it before
Yes.
COVID, I guess? And then,
Yeah.
you're talking about travel here.
Sure. No, for me, the primary benefit in using the credit card as my my main spending card versus a debit card is to receive rewards. I use a credit card that has a good travel rewards benefit. And before COVID, I was able to book flights using credit card rewards. So because I'm still religious about paying off my credit card, like still every 2 weeks, it kind of acts like a debit card in that way, but with some extra perks. So that's really the rationale. Is with the debit card, I'm not getting anything additional by spending with it, but with a credit card, I do get some more back from it. But again, I am paying it off, religiously.
Yeah.
There was, Claire, if you don't mind, there's another question in the chat about long-term investing when markets are at an all-time high. And I thought we should speak to that too, if we didn't get it answered yet. I don't think we did.
Well, you've just volunteered yourself to answer that question.
I think it's a super interesting topic, and it's something that I think is also, it's a hard pill to swallow when you look at the markets lately that, that are going up and up and up. And something I wanted to comment on earlier when we were talking about starting small and investing in M1, even with $100, is investing does involve risk. And if you are somebody who checks your portfolio every day and you look in and you put in $100 yesterday and today it's $97, you might have this sinking feeling of like, oh my gosh, what did I just do with my money? But we embrace a long-term mindset and know that historically over time, the markets perform like this, right? So there's dips and ebbs and flows, but over time in the long term, we're talking 5, 10, 20, 30 years, decades over time, the market continues to go up. And we believe, that when even right now, and no one can say to you like, today is the best day to invest. We don't know what tomorrow holds. But historically, when you look at that trend, that is why we are believers in long-term investing. And the best thing to do is start when you can and start early. And that's, the ethos that we embrace at M1, and also why I don't check my account every single day because I'd go crazy.
Right. And I think you used to, and somebody else on this also used to look at like Mint all the time and had to like uninstall it. That was more about tracking your spending than investing. But even that was, you were just going, it's too much to look at.
I equated it to counting calories. And I think every person has to do this for themselves, right? Is find that right balance of what's the amount of control and checking and frequent monitoring that you can do. But it drove me nuts, and I had to get rid of Mint.
Yeah, that happened to me too. I was focusing too much on every single little cent, and that was just taking, like the fun out of living and the fun out of, doing my trips and planning trips or planning to go out for dinner with a friend. For me, it didn't work. So I had to get rid of Mint too.
Sorry, Mint. Clearly we'll never sponsor Ladies Get Paid. So two things I just want to mention just in terms of the credit card. You also want to build credit. And so a way to do that is to use your credit card, but you have to have the money for my own sanity and also to build good credit. You should have that money already that you can pay back, right? So when I'm spending money on my credit card, I already know I have that money in my checking account, right? So I'm volunteer, right? It's a choice to use my credit card rather than a must. And that is after having gotten into over $20,000 worth of credit card debt because I did not know how to use it. And I looked at it as if I were borrowing. Well, hold on now. Those interest rates were outrageous. It's the highest rate you will ever have if you were to borrow money is using your credit card. So knowing that it can build credit, knowing that you can get different benefits. I also, having gone through massive credit card debt, I just have such satisfaction and pride that I can pay it off ASAP, that every week, every 2 weeks, I'm like, pay in full. So there's something about that. I could totally have it automated. I chose not to because I like that feeling of being able to watch the paying. But also there are things that I do have automated that make it so much easier. So I do find it's so interesting in this conversation, and I'm really glad we're having it, about how personal this can all be. At the same time, there is a framework. There's a framework for how we approach this. There are some good rules of thumb. There's obviously experts who've developed pie, so they know what they're doing. Something about investing that I just wanted to hint at, and this might be quite 101 for many of you, but it really was an eye-opener for me, was when I saw certain stocks go high, I thought I should buy, right? Well, hold on, when you're buying a stock when it's high, you're going to pay more. And then I thought, well, then does that mean I buy when stocks are low because it's not doing well? That doesn't seem to make sense. But the answer is yes, you do. This is not real financial advice. I'm just sharing my personal story. You do, because it's cheaper to buy, and knowing over time, as Claire said, the market has always gone up. So if you buy when it's low and you're looking at this as a long-term investment, you're good, versus, it's high, now I want to get in. Again, you want to play with this. Kat had a great point of like, there's some things that she has investment in that she's willing to play with, right? And then there's other things that she knows, okay, that's the account that's, solid. It's going to take longer for it probably to make money, but understanding kind of what's short, medium, and long-term, and how that fits into your life now, and how it might change as we have those big money moments, as we start getting more comfortable, emotionally and financially. In our last couple of minutes, I see lots of great questions that have been asked and answered in the chat, which is great. If there's anything else that folks want to ask in the next few minutes, just pop it into the chat. But while you're doing that, Claire, Kat, Ariel, what last words of wisdom can you leave with all of us? And I have another question I was going to ask Claire, but give us the words of wisdom first.
Just get started. Start small. Just get started. Investing.
Consensus? We didn't all have to agree on that. Was that what we want to go with? Kat, you were about to say something.
I was going to say, I agree with that. I think just like getting out of whatever mental blocks you have right now that are keeping you from investing and from growing your money. And then, start as small as you feel comfortable. You can always, you can keep growing it. You have time.
I'd echo everything they said, and also talk about it. Like the thing we're doing today, do it with your friends, especially with your female friends. Do it with the teenagers, the young women, do it with the older women, talk about it, share the information you learned, ask questions, follow us on social media and engage in the conversations. We want women not only getting started, but having these conversations and educating not only yourself, but others, and then patting yourself on the back for doing that. That is so important and will make you feel so powerful and so good at that getting started point.
Yes. Claire, do you want to go ahead? I saw you muted yourself. Now you should be unmuted.
I'm laughing about your beginning comment about babies. I keep hearing, that's why I'm muting my baby.
Oh yeah.
Crying, so.
Sorry, I didn't mean to proactively shame you.
No, Kat and Ariel perfectly followed up what I started there. So.
Question for you, just personally, I know we're at time, but I think you joined 6 months ago. You joined M1 6 months ago, and the company's already doubled. So just, because Ladies Get Paid is about, yes, money, but also about career. Yeah. Being in this like fast-tracked, yes, company, but also fintech as an industry. Yes. And now having all of these options, right? We don't have to go with the traditional banks if it's not, working for us. Yeah. So just for you personally, how have you seen, what is it like being part of a company that is so like just rocket ships?
It's so incredible. And this is where I'll add a shameless plug. We are hiring. We actually just announced that we raised our Series E yesterday and became a unicorn, a fintech unicorn, which means we are over $1 billion valuation company. And it is a rocket ship. The company was less than 100 employees when I started, and now we're over 250. It's so fun. Every day is something new and challenging and exciting, and we're all learning together, and truthfully building something together is a really gratifying feeling. So do go to our careers page if you're looking for a new opportunity. It's such an exciting time to be in fintech, and particularly an exciting time to be at M1 because the people and the product are second to none. So
I knew that we needed to talk about this because we're seeing all of these people in the chat. Are you hiring data scientists? Is this, Chicago based? Is it hybrid? Yes, I'm ladies get paid. This is so great. I don't know if there's anything else you guys want to speak to in terms of the company and the company culture and what you're hiring, but we can absolutely put more information in the follow-up email that we send. So everybody who's watching now, you'll get the recording, you'll get the follow-up email. If you are watching and it was not live, we'll put all of that in the notes in the YouTube. I sound like a boomer, in the YouTube. And other than that, we're at time. I am so grateful to all of you for being here, both for our wonderful panelists and for everybody who came today, and for M1 for supporting this and allowing us to put on programming like this. That's free. Well, that's free for everybody. So the money that you might have spent coming to an event, go take it, put it towards the $100 to start your account. And by the way, follow me again. Claire Gets Paid on Instagram. We've got the Ladies Get Paid book, ladiesgetpaid.com/book. And I appreciate your time. Have a wonderful rest of your evenings or wherever you are at whatever time you're watching it, and go get paid.